Hey guys, welcome back. In today's video, we are talking about the AMC Record, the extreme opportunities, $300 per share, and many more in this video. First, we're taking a look at this. AMC Entertainment recorded its highest domestic and global May attendance since 2019. More than 25 million moviegoers attend AMC theaters in the month of May 2026, the highest May attendance since 2019. And we also saw it for the weekend as well with 4 million moviegoers. So this is very, very good for AMC. You can see Aaron talking about this as well, how we are seeing this is the highest attendance for a month of May in 7 years, better than any May since pre-pandemic 2019. So what we have to understand is what this means for us. Firstly, we've talked about this. Even if we were able to get the same audience as last year, the year before that, the years before that, we are still making more money because of the efficiency of AMC. We talked about how the revenue per patron has gone up tremendously. So even if we are seeing the same box office, even if we are seeing the same amount of attendance, we are still making more money. But the cherry on top of this is that obviously we are now seeing even more attendance than what we were expecting. So the revenue is going to grow at a rate that we are not expecting, that we were not going to be predicting, but actually higher than what everyone else is thinking. Now, on top of all of this, we still have major movies that are coming out in June and July too. What's crazy about all of this is that currently the movies that are doing well right now aren't even the movies people were originally talking about. The movies people were originally excited about, said that it was going to do numbers, are doing numbers. But what's better on top of that is that the movies where we weren't expecting to do or nearly as well as the movies that we originally thought, they are actually doing even better. So this means that we are seeing an era, industry of how these newly made movies are able to see a bigger audience, and that's what we want to see. Any movies that's able to get a large box office, that's able to attract audiences, is exactly what we want. You can see some of the things that aided to this. Obviously, we talked about how previous movies that we were expecting to do well, such as the Super Mario Galaxy movie, it obviously did exceptional. We see it surpassed 990 million worldwide. We talked about how the budget was only 110 million. And what this means is that firstly, we are seeing movies do well. We are seeing movies doing massive numbers, and that's extremely beneficial for AMC. Secondly, I do think that we are seeing now an opportunity where your budget, you're able to get a 7-8x return on your budget with the box office, and that's going to attract even more studios to create more movies. And that's what we ultimately want. We are not worried about competitors within the market. What we should be worried about is if there's a lack of movies. And so if we're going to be seeing anything that is going to attract more studios to create more movies to come into the box office, then that's exactly what we want to see. Now, another big thing, going back to the point we were talking about earlier, where people originally were looking at some other movies that were expecting to kind of carry the box office. But what we actually saw was movies like Backrooms, which have done exceptionally well. And this is a very, very important signal. The reason why I say this is, if you see here, Gen Z has just sent Hollywood a strong revolutionary message. For the first time this century, 2 indie movies took #1 and #2 at the summer box office. Around 80% of Backroom and Obsession are under 35. They want new ideas. So this is very big. Firstly, this is the first time this century that 2 indie movies have took #1 and #2. So this is what we said with how new emerging movies are actually doing better than we think. So that's going to be on top of the existing box office that we are already seeing. That's going to add on to the numbers. But secondly, it's the fact that there are people who are making these new ideas of movies that is attracting a whole new demographic. The TAM is increasing. And so now it isn't a matter of we are lacking audiences. More and more people want to go watch movies. And it isn't just one generation, but multiple different age range. And so the important thing right now isn't, can we get people to watch movies? Because the answer to that is yes, people are already watching movies. The question we should be asking, and is exactly what AMC is doing, is how do we get people to watch movies at AMC? That's the important fact. It isn't about how do we expand viewers anymore. It's about how do we get the majority of viewers to come to watch at AMC. And that's what we said with premium theaters, premium screens, and that's exactly what AMC is doing. And so you can see at a time like this where movies is doing extremely well, what AMC has already done is going to put them in a very, very good position. If you take a look at some of the overall box office data, we are seeing May box office finish over 1.05 billion with a fantastic 177 million thanks to Backrooms. Q2 now over 1.9 billion with June still to go. So we are still seeing massive movies that are coming out. We are still seeing how Q2 is doing well. More importantly, the fact that Q2 has already done this well and we still have Q3, Q4, this is going to be a massive boost to what we have, to what we are going to be doing. And so this is something that we've said, Q2 fundamentals, Q2 earnings, keep a close eye. But the most explosive part of AMC this year, in my opinion, is going to be Q3 and Q4 because of how much of a projection it's going to have. Now, you can see already with 800K in June, we beat Q2 of 2025, 900K or higher with bringing cash, with 1.1 billion, you can see at how these guys are messing up. And so this is where we are at with in terms of the growth of box office. More importantly, it isn't just the fact of how we are seeing AMC growing, it's the fact with how not only is AMC growing, but the box office is growing, and it's growing at a rate that is going to put AMC at the perfect position. You can see one of the key words we use is positioning. That's because that's exactly what AMC has been doing. AMC has been doing the premium screens. We talked about this years ago, and some people were upset about it because they thought that AMC should use that money to perhaps buy back shares, to perhaps pay off more debt. But we are seeing exactly why that's paid off for AMC, because in today's market, with how well the box office is popping off, it's a matter of how do we get the most audiences to come to our theaters to watch, and then also spend money at the theaters, whether that's buying concessions, whether that's buying merchandises. All of these things has exactly what AMC been planning and positioned themselves for. And so the fact that they have already positioned themselves for this, and we are still seeing a year-on-year growth with the box office, with the industry, that's how we know AMC is doing well. And so ultimately, the stock is still undervalued. It's straight up insulting at these sub $2 prices. This is why we're seeing how more and more people are buying into AMC, why you're seeing the volume extremely high right now. Today, we saw over 100 million volume, AMC up 22.54%. It isn't a surprise when you start to see how much people are accumulating because they realize how undervalued AMC is. What's even more important is that we are still in the early phase, because under $10, the retail buying power is going to be extremely big. It isn't to say that there's going to be a decrease when we go above $10, but we are not going to be seeing that sort of momentum coming in like we are now. We're going to be then seeing more institutions who want to buy into AMC. So right now is the opportunity for the retail, but it's also talking about how much power the retail ultimately has on AMC. And it's why we're seeing the institutions trying to push retail away. And ultimately, we can see right now it's still priced at bankruptcy levels. The stock needs to be around 1180 for the entire company. And what we are seeing right now is how we can get there. And until we get there, even when we do get there, it's still extremely undervalued. But when we do get there, this is what we talked about with how then the retail power just won't be as powerful in comparison to now, because at that time, we're going to be competing with the institutions with billions of dollars who then wants to get into AMC. And so that's why we are seizing this opportunity that we have right now. And so firstly, and this is for the apes who have been here from day one, and a lot of people on this channel are from day one as well. We've waited for this day for years, for the full box office recovery, and it feels so wild to be living in it. We talked about how well the box office is doing, and it's why we're able to see AMC go up 22% in a day, because we are in that market condition right now. And when you take a look at kind of the deeper things as well, already we are seeing how big money wants to accumulate already. We've seen institutions who are accumulating, but they want to get in more now. It's still very, very early in my opinion, but you can still see here where we see 32,000 calls bought, split into 2 orders and transacted 3 and 4 cents above the ask respectively. So firstly, massive options volume coming in, and this isn't perhaps a retail but institutions because they bought 32,000 calls. And what's important about this is that already for June 18th, we're seeing so much money, so much options in the money already, 214,000, with more potential out the money options to go in the money. The max pain is at 150. And so you can already see how the shorts are panicking with how the price of AMC is going. This is exactly what we talked about with the gamma exposure, with how AMC is going to see that massive increase, especially with what we have right now. And more people are saying this, the stock is ridiculously undervalued. When AMC is repriced correctly, it's going to make the last short squeeze look like a game. And there's a big reason for why we say this. Firstly, today we saw Bitcoin being sold off. Now, some people are suspecting, are they selling Bitcoin for liquidity to hold AMC? Now, this isn't something that is new to us because we've seen in the past how collaterals for these assets are used to actually maintain the AMC short positions. And so in a day where AMC is going up 22%, it wouldn't be surprising for these collateral assets to go down because people will need to sell those assets to keep the margin on for AMC. But then going back to what we said with how it's going to make the last short squeeze look like a game is because the collaterals over these years isn't just on Bitcoin, but on multiple different assets as well. And it's accumulated such a big volume. But even then, if we just look at Bitcoin, the last month's market cap drop in Bitcoin corresponds to $300 per AMC share. So this is what we talked about with how easily AMC can go into the hundreds, into the thousands. When you take a look at how much value is in these collaterals, and again, it isn't just with Bitcoin, it's with multiple different means of assets as well, you can see how that's easily going to allow AMC to go up into the hundreds, into the thousands, and higher than that. And that's why we're still saying it's undervalued. And the fact that AMC closed at 212 after printing 221 instead of collapsing back under $2 is a very constructive sign. The price is starting to catch up with the fundamentals, with how people are realizing how undervalued and where AMC should truly be. Now, we talked about how well AMC is doing. Let's talk about how bad the shorts are doing. Firstly, Citadel Securities lost its bid to block the IEX group from launching a new type of option exchange that intentionally slows orders. So this is what they're doing. Now, there's a big reason for why they are doing this. Firstly, some of the key words here, slows orders. So why is this important? Well, firstly, they just reported $4.3 billion in trading revenue for the first quarter of 2026. You can see this. Now, the reason why they say this is because, and why we're seeing this is because volatility mints money. So anytime we see a volatility for Citadel Securities, they are making money because the market makers, and that's what they do. And this is why you're seeing them trying to reject anything that slows orders. So the fact they failed this, the fact that we are going to see this go through, it's already something that is going to take a hit to their revenue. Now, despite the fact they've posted $4.3 billion in revenue, what's crazy about this is the fact that they are still trying to seek to extend and upsize the $4 billion loan. So they just posted massive record profits from trading, from everything, yet they are trying to increase their loan. So something clearly isn't adding up here. And this is what we've said with how AMC is doing so well right now, but the short sellers aren't. Another big thing, UBS warns loan defaults could double to 10% because of AI. So on top of all of this, we're still seeing how a massive collateral problem is still happening. And this is what we've said with massive margin calls will be occurring. When you take a look at the reverse repo, 1.3 billion. Nothing wrong with this in terms of the fact that short market makers, banks, institutions, they are still in need of money. The fact that we are still seeing this go up and down is still concerning, but it isn't surprising because we knew everything that's ongoing. And then finally, when you take a look at the Korean stock exchange, you can see how well it's doing. And this is the effect that banning negative short selling has on a market. As always, this is Financial Advice, and I'll catch you guys next time.